Forex Focus brought to you by IG. Why the market does not believe the Bank of Japan. This is a really interesting story, and one of the ones that is a great example of why I got into trading and what I really love about watching markets on a day-to-day basis. You can read all the news stories you want. And right now, if you Google Bank of Japan news, you'll get a bunch of different stuff telling you, why Japan is about to resurge because the Bank of Japan is now lifted interest rates and they're going to finally do away with easing and X, Y, and Z. And you can read a bunch of stories that say the Bank of Japan is not doing enough, they're easing too much and everything else. Or you can look at the market, and the market will tell you exactly what they believe. And before we look at this yen market and see how it's going against the Bank of Japan, which people who have been trading for years know that this is a common theme. Every time the Bank of Japan, it seems, tries to either ease in terms of their policy or constrict, the yen will a lot of times go against them and kind of tell you what they believe the market actually is for that Japanese yen. But first, let's give you some context as to what's been happening in the last week. The Bank of Japan has eased for the last decade plus. I mean, the last time Japanese rates were greater than 0% was 2011. And in the most recent report, you see here that they found that the data shows that sustainable and stable achievement of the price stability target of 2%, accompanied by wage increases, has not yet come in sight, and they will need to patiently continue with monetary easing under the names here, further easing policy and their yield curve control. Now, why are people excited about the Bank of Japan? You've maybe read some news about either the yen or how they're going to stop easing or they're going to raise interest rates. Well, further in their statement here, they did loosen their language a little bit, which could open up for higher rates in the future. You see here in this section, they're no longer setting a rigid limit for the 10-year yield at 0.5%, and they will now start to look at controlling that yield curve at 1%. And so this is effectively saying, okay, we're not hiking short-term interest rates, which we'll get to in a second, are still negative, actually. We're not going that far. But we will let our 10-year interest rate off the leash a little bit. They've been holding it under 0.5 percentage point until this last week. We'll let that go as high as 1%. Essentially, really dipping their toe in, as little of their toe as possible, into, in the future, we could hike interest rates, but we're not doing it right now, and we're still looking at easing because it has been a rough decade or so of in terms of economic growth for Japan, and so they don't want to spook anybody, even though their inflation is high relative to where central banks usually want it, 2%. It is over that 2% level. And so they could be hiking interest rates, right, like the rest of global regions, but they're not ready yet. They don't want to spook their economy. Now, let's get into the price action and why the market doesn't necessarily believe that the Bank of Japan is going to start hiking anytime soon. Or maybe they just think that if they are going to hike, it's not going to be enough, because the yen is near 30-year lows versus the dollar. And you'll remember that, generally speaking, central bank hawkishness or interest rate hikes constricting economic activity usually leads to a stronger currency. On the flip side, easing and low interest rates lead to a weak currency, and you've seen a weak yen for the last couple of years here. This is the monthly chart. And last year, actually, they hit 150 for the first time since 1991. So that's 30-year lows for the yen, highs for the dollar against that yen. Now let's get into the actual action around the news of the Bank of Japan's recent statement, because you might say, hey, man, I thought the yen, was doing really well off of this Bank of Japan statement. And they actually rallied the yen going into it. You can see here the downside in US dollar JPY, the upside in yen going into the event. got all the way well below 140. Actually, at one point on Friday, was looking like it was going to trade 138, which it has not spent a lot of time below. Got close to 138 and then bounced all the way back. Now we're trading above. In terms of dollar relative to yen, we're trading below in terms of yen, the lows going into this whole news story. So now it's crazy how these things can swing so quickly. The Bank of Japan is going to come out and say something hawkish for the first time in years and years and years. The yen rallies off of that. The Bank of Japan comes out and does it on Thursday night. The market doesn't think it was hawkish enough, and the yen ends up being lower than where it was before any of this news started to break. A full, there and back story for this yen, rallying on the news and then really selling off to below its recent lows for the last couple of weeks. When the Bank of Japan actually comes out, because the market didn't think it was hawkish enough. And this is a classic case of, market versus central bankers, or you'll often see like political leaders say one thing and the market tell you what it actually thinks is going on there. And what should have, and of course I say should have kind of facetiously because nothing necessarily should happen in the market. But what could have been translated as, something strong for this Japanese yen. Oh, hey, they're letting their 10-year interest rate go from 50 basis points to 100 basis points for the first time since the pandemic outset, really, is translated as bullish for the yen. And then all of that's given away and then some. And now we're trading back above 142 in this dollar yen here. And it makes sense, right? Because the market going into the Bank of Japan meeting thought like, oh, these guys apparently are going to really do something hawkish, really put interest rates a little bit higher. And at the end of the day, they're allowing for their 10-year interest rate to go higher. Yeah, sure, that's good. But they're still at negative 10 basis points for their short-term rate. And the U.S. hiked 25 basis points last week. The Eurozone hiked 25 basis points. The Bank of England is projected to hike 25 basis points this week. They're all above 4%, in some cases above 5%. And so the Bank of Japan, not even moving their interest rate off of negative territory, is not going to lead to too much upside for that yen. So really interesting story here of Bank of Japan, at least setting the course to move interest rates higher. The market, though, not thinking that they're doing enough as yen still trading near its lows.